there's a lot more that goes into it, right? You must be able to analyze each time frame separately, and you must be able to know what you're looking for. Right? Crucial thing that we look for is that we're going to make sure that the 1 hour time frame matches the daily time frame. This is very important, right? Because on the 1 hour time, because if we're bearish on a daily time frame, there's a good chance if you scale down to the weekly, to the 1 hour time frame, the 1 hour time frame might be bullish, right? So now we're going to wait for the 1 hour to catch up to the daily. Once it does, I'd say like there's a 95% chance that you're going to win that setup, right? But nonetheless, any more questions, right? So on the daily time frame, we're getting lower lows and lower highs, and the reason I'm saying is to be patient enough to trade with the overall trend is that it is going to make you wait, right? We already know that we're not looking for buys. So even if the market is currently at a good support level, I'm not interested because out of nowhere, it can easily break that support level and keep trending down. GU has to create under a lower low for it to go up to create the next lower high, right? So your only job is to wait for the market to come to you to create something lower than the previous structure for you to get in and for you to keep on selling it, right? Once you trade with the momentum, you can easily go to sleep and not worry about if the market is going to switch up on you, right? Does that make sense? Okay. So this area was a good potential zone. You have a high, you have a low, and you have a lower high. So now we use something called the Fibonacci tool retracement to help us with our entry price, right? So we usually like look for to get in between the 50 and the 61% level, and I'm going to show you guys how we do it. If you grab your fib, if you place it from the most recent high, right, to the most recent low, right here. As you can see, the market created a low, the market created a high, then followed by a low, then it went all the way up, right, to create something lower than the previous high. That's why this is called a lower high, right? And one thing that you guys must see at the 50 and the 61% level, if you're looking for a sell, you must see the market create some type of ceiling, some type of resistance level between the 50 and the 61% level for you to get in. And like I've mentioned before, you don't blindly, as soon as the market goes for those two levels, you place a sell, right? You have to wait and see how the market is going to react between those two levels, because for all we know, it can easily keeps on going up. Right, but if you see the market is failing to actually goes past above the previous high, then that is a good indication that you should get in and place your sell. And also, I'm going to show you guys how you can scale down to the 1 hour time frame to make sure the 1 hour time frame is telling you the same story as a daily time frame. That's something we've actually implemented a couple of months ago into a strategy as well, right? Feel free to stop me at any given time, guys. Yeah.
How do you place Fibonacci? Do you take the current high and the lower low?
Yeah, so you go with the most recent. If you're looking for a sell, you have to start it from the most recent. In this scenario, right, this was the only high that the market created. You have to place it from the high to the low to give you the lower high. So lower high. Then now you have to do the same thing again. I'm going to show it to you. Right. I'm going to grab more of my rectangle boxes right here. Right. Actually, let me do this. So now I'm going to do the same thing again. The market went down to create a lower low, something lower than the previous low, right? This low is lower than the previous low, which makes it a lower low, right? And then if you grab the fib again, if you place it from the most recent lower high to the most recent lower low, let's see what we got. So I'm not sure if this was proper structure. Yes, it was. Right, and the market retraced again to react at the 50% level, right? And then you would sell it again, right? This would have been a good potential selling zone as well. Right here, right? So now you have a high, you have a low, you have a lower high. You place your sell and you'd get out at the previous structure, which is probably going to be the 0%, or you can hold it all the way to the minus 27% to create a lower low, right? This can be your TP1, this can be your TP2. and then you'd get out, and then you're going to do the same thing again, place it from the most recent lower high to the most recent lower low, and then you'd be looking to sell it again a second time. And all you have to do is keep on repeating the same process, right? So now, but the way I trade is I'll probably hold it for a long period of time instead of closing in and getting out. That's because that's how I trade. So now you're going to place this right here. Let me zoom out. You have the high, low, lower high, lower low, and lower high. And like I've mentioned on the weekly time frame, the reason I started looking for sales, you can clearly see there was a break of the trend on a daily time frame as well, right? Touch went all the way up, touch went all the way up, touch went all the way up, came back here, touch went all the way up. And this is very important, guys. This is why you got to be able to tell when there's a reversal happening in the market, right? As you can see here, touch went all the way up, touch went all the way up, touch decided to go up, but failed to close above this structure, because here you're getting higher lows and higher highs, higher lows and higher highs, higher lows and higher highs. But here you have the most recent higher low. Obviously, you'll be looking for a buy. But as soon as you see the market cannot go past this previous high, and instead created a lower high, then you'd be looking for sales. And also, you also had the break of the trend and a retest of the previous uptrend as well. And also another lower high was created below the break of the trend. Right, so you have a lot of confirmations telling you that GU is bearish, and that's why I decided to call it. And then we did make some money on it, right? So let me get rid of this. So now I'm going to do the same thing again, right? This is what I called the GBP USD setup for the team, all right? You had this thing was created right here. So high, low, lower high, lower low, lower high, and another lower low was created. And all you have to do again, guys, right, grab your fib. And I'm going to scale down to the weekly time, sorry, to the 1 hour time frame to show you when to actually place the sell or the buy, because this is just the daily time frame. I'm giving you guys examples, but you don't place the buy and just based on the daily time frame. You have to make sure the daily, so you have to make sure the 1 hour time frame also aligns with the daily time frame as well, right? So if we place it from this to that, right, as you can see, the market went this. And this is one of the reasons why I call this GBP USD sell, right? The more touches you, obviously if you're looking for a sell, you want the market to create some type of resistance level between the 50 and the 61% level, right? The more touches you get at the 50 or 61% level, that is a good indication that the market is telling you it is not trying to go past the previous structure, right? So as you guys can see, right, we have 1, 2, 3, 4, 5. Even you can even count all this if you want, because that is still at the 50%, right? The minute I realized the market created that beautiful structure as well, I called the sell for the team, right? I think, if I'm not mistaken, TP, right? TP1 was, I only use one TP, which is at minus 27%. Called the sell. And then final TP was at minus 27%, which means this is where the next lower high is going to be created, right? We have this, yet again, we have this high, low, lower high, lower low, lower high, lower low. And then this right here was where I called it. This was the most recent lower high, all right? So you take the sell, right? Your stop loss should be close to the 78.6%. Or stop loss on average for currency is about 50 pips. So let's say if you have 1K in your trading account, you'll be risking about $50, which is 5%, right? And our TP is always going to be 3 times more than our stop loss. That is very important, guys, right? So which means you're giving yourself room to take losses, because you are going to take losses, right? Let's say if you take 4 trades, if you lose 3, if you win 1, you're going to be at break even for the week. Right, and this is why when I take a lot of losses, but right, this is why I don't panic when I take losses, because I need a couple wins to actually make enough for the entire month, right? So you'd place the sell, right, and then you'd probably hold to the 0% previous structure or minus 27%, right? So now this is where we're currently at. I'm going to scale down to the 1 hour time frame to give you guys better examples as well.
Yeah. So the Fibonacci you said you place it to the last lower high, right?
Yeah.
Then I saw, was it at the 60 level or 15 level when you was
Yeah, it was at the 61% level. So I've placed it from, so let's say if you didn't see all this, right?
Yeah.
And this is what I saw.
Yeah.
This is what I saw. Before the entire move happened, this is what I saw, right? Actually, yeah, this is what I saw, right? So you place the fib from this to that. Does that make sense?
Yeah.
Right? Once
So
you,
the fib, right? Is there a 0 level in the middle? Because
Yes.
it seems like
Yeah, there's a-
you put the whole thing, right?
yeah, the 0 level, that's where your TP is usually going to be at.
So that's the level, okay.
Yeah, right. So your 0%, you'd be looking to get out. You'd be looking to actually start taking some money off the table at the 0%, and minus 27%. That can be your final TP, right? But that is just a daily time frame, guys. There's much more that goes into it. All right. I'm going to scale down to the weekly time frame to show you guys something. So now, as you guys can see, the market created another lower low right here, right? Because this low is lower than the previous low. You do the same thing again. Place your fib from this to that. I'm going to do it for you guys, right? Now you place your fib from this right here to this, right? As you guys can see, again, you went for the key area for you to sell it, right? That is just the daily time frame, right? We have to scale down to the 4-hour time frame, the 1-hour time frame, and so on and so on and so on. So I'm going to give you guys an example, right? Let's say, since this is where we're currently at, right? Let's say if you're looking for a sell, right? You see this lower low, because this low is lower than the previous low, right? And then you see the market creating a lower high for you to sell it, right? All right, is a potential selling zone. So let's say this is what you see on a daily time frame, and this is something new that we've actually implemented recently, right? So that is the daily time frame, right? The minute the market comes to the 50 and the 61% on a daily time frame, that's when you start paying attention, right? You'll be like, you know what? Okay, the market is at a key zone for me to sell it. It is bearish on a daily, on a weekly time frame, so I'd be looking for sales only. So now you're going to scale down to the 4-hour time frame, right? So in the 4-hour time frame, right, like I've stated, guys, you see this is very, very important, right? We know the daily is bearish, we know the weekly is bearish, but tell me what you see. Never mind this, right? This is what you're seeing on the 4-hour time frame. What kind of trend would you call this on the 4-hour time frame?
A bullish on this from
Exactly.
support levels.
Exactly, right? But you have to keep in mind that the daily and the weekly is bearish. And this is why a lot of traders lose money, right? So you never go with the 4-hour or the 1-hour trend, right? At least with the way we trade, right? Because we know at any given time the market can flip on you, and this is what happened, right? So we'd be happy that we don't call this a trend, we call this a retracement. Obviously it is a trend on the 4-hour time frame, but to not confuse our mentees, we call it a retracement, right? So what we do is, we know on the 4-hour time frame what we look for is in this scenario, we're going to look for buyers to stop buying, and we're going to look for sellers to start selling. Very important, guys, right? So on the 4-hour time frame, you can clearly see that buyers are currently in control. Go ahead.
Would this also be a formation of the upper wick on the daily or like the weekly time frame?
Exactly, right? So this is, we already know that on the daily, it is going to create a lower high, right? But you have to scale down to the 4-hour time frame to make sure that buyers are going to stop buying and for sellers to start selling, right? So on the 4-hour time frame, as you guys can see, buyers are currently in control, buyers are in control, and this is what, obviously, like I did not sell GU at this zone, I sold it up there, but the thing that probably could have like tell you that, hey, buyers are no longer in control. As you guys can see, you're getting like nasty bullish engulfings, and then guess what, guys? You see sellers are coming in, right? This right here, and you see the market is creating a nice resistance level on the 4-hour time frame as well. And more importantly, guys, after the sellers started selling, the market created a small structure, which is a small lower high below the previous high on the 4-hour time frame. Like, you gotta be able to implement so much into it, right? It's very easy, but you have to make sure like all the time frames are aligned for you before you place a buy or a sell. Yeah, go ahead.
Right. Why are you saying this is a bullish trend? Like the whole trend, if you look at it, is bullish?
No, that
This time frame. Yeah.
yes, the 4-hour time frame, absolutely. Because the 4-hour time frame, like, let me show you something real quick. And this is why you can easily get trapped, right? Us, we don't focus on. Look at this. You'd be like, oh my God, there's a reversal. The market is bullish, right? But it is not bullish, right? You can clearly see on the 4-hour there was a break of the trend, and it is going up. But the fact that you've already analyzed the daily and the weekly, you already know this is a fake out, right? This is not a true trend, right? This is nothing but a retracement. Does that make sense?
Yeah, because I was just thinking the only time it will be bullish, like, or it's about that, where the yellow line is, where the buyers were in control.
Like this?
No.
To analyze the 4-hour time frame, automatically you'd be looking for buys here, right? Because there was a break of the trend here, right? And there also say break of that little lower high small structure on the 4-hour time frame. Like if you, let's say if you didn't have like the knowledge of the daily and the weekly, I can guarantee you would have been looking for buys here. I would like if I did not analyze the weekly and the daily, I probably would have been looking for buys, right? Because you had this downtrend and you had this break of the downtrend, and also the market created a structure here. You also had a push above that structure, but we already know that this is nothing but a retracement based on a daily time frame. This is not a proper reversal, right? Because we go with the daily bias, not the 4-hour bias.
Yeah, I get it.
Yeah.
As he mentioned, if this level was broken above, so
Yeah, that's it.
that would be bullish. So in that case, if you want to buy, right? So do we have to like wait for those resistance levels to be broken, or would it still be considered as a fake out?
Since we analyze the daily, the only way I'd be looking for buys on GBP USD, let me show you, right? Because I know this was the, okay, actually not this one. This is the most recent. Actually, let's say if I didn't have this right here, right?
Yeah.
If I was looking for a buy on GBP USD, I would have not bought it here or even all the way down there, right? The only way I probably could have placed it buy on GBP USD, I would have waited for the market to actually break that previous lower
Resistance levels.
lower high, right here, and then to come back to create the opposite structure, which is going to be a higher low, and then they would have bought GBP USD, right?
So right next to it, right on the left. So let's say where the previous
Here?
where the retracement is.
You mean this?
Above that, the high.
Yeah.
Good, perfect.
Yeah.
Next to it on the left, doesn't it have to break that where buyers were before you consider it as maybe it's going back to being bullish?
No, not this. He has to break that because this is a true structure based on the daily time frame.
Right there.
Where?
If you just
Like, you can come up and show it to me.
yeah. Sorry. Like my mindset is, doesn't it have to break somewhere here or here?
No. These are not structures. This is the true structure right here on a daily time frame. Remember, you play. That's what I've mentioned in the beginning. You have to place your market structures on a daily time frame. Until there's a break of the daily structure, the market is still bearish. You see, for example, right here, this was a lower high. The market dropped, went all the way up. Guess what? It didn't break it. So that's what we call the sell. Right? Yes, we're looking for the 50 and the 61% retracement level, right? But as long as the market cannot break the previous structure, sell it, right? But it has to be on a daily time frame, right? So now if I scale down to the 4-hour time frame, this is where we're currently at, right here, right? If you did not, that's what I'm saying, it is crucial, guys, to analyze the daily and the weekly time frame, right? And then if you did not analyze the daily and the weekly time frame, you probably would have been buying, you're in profit, and you go to sleep. And by the time you're up, stop loss, you would have lost money. Right, because you had no prior knowledge of the daily and the weekly time frame, right? So you have to go with the daily bias at all times, guys, right? So now this is where we're currently at. Like I was saying, on the 4-hour time frame, right? You analyze the monthly, the weekly, and daily. On the 4-hour, you look for momentum shift, right? If the market is like, even before I did this TA, the daily, we know that the daily is bullish, but the 4-hour was currently bearish at the time. Right, but we know, currently bullish at the time, right? So we're not looking for buys because we already know the market is bearish on the daily. So what we're going to do is we're going to wait for the market to come to our level, right? Your fib probably going to be 56.1% retracement level. Yet again, that's something that we implemented. Right on the 4 hour, you look for the momentum shift. Right, the minute you realize sellers started coming in, that is a decent indication to start selling it. Right, and then you're going to scale down to the 1 hour time frame as well. Right, there we go. This is perfect, guys. Right, so monthly supply and demand levels. Weekly, you go for you check the overall trend, and you also check if there was a break of the trend as well. As you guys saw, there was a break of the daily trend. Right, perfect. So now we know the weekly is bearish. So now you go to the daily time frame. You make sure the daily matches the weekly. The daily is also bearish. Right, good. On a daily time frame, you're also going to place your key market structures. Right, downtrend, lower lows, and lower highs. Right, and you're also going to use the fib as a tool to tell you when to get in, but you don't just get in blindly at the 50 and the 61% level. If you're looking for a sell, the market must create some type of ceilings, resistance level between the 50 and the 61% level. And then you scale down to the 4 hour time frame, and you're going to look for momentum shift. Right, you're going to wait for buyers to stop buying, and you're going to wait for sellers to start selling. Right, and that's why I mentioned you don't just sell automatically right here, because for all you know, the market can easily keep on buying and actually breaks the previous lower high and keep on buying. Right, this is why you have to wait for momentum for sellers to start selling. Right, this would have been your indication, right, to be like, you know what, buyers are no longer in control on the 4 hour time frame. I already know the daily and weekly is bearish, so now it is a good time for me to look for sales. Let me scale down one more to the 1 hour time frame. Right, guys, this might seem a little complicated, especially if you're a beginner, but I can guarantee you, like, within a few weeks, everything will make sense. Right, so now you scale down to the 1 hour time frame, and this is the ultimate confirmation that we use. Like I've mentioned earlier on, if the market is, don't mind this, right, all this, if the market was bullish, is bearish on a daily, there's a good trend the market is going to be bullish on the 1 hour. So what we look for on the 1 hour, guys, watch this. Right, we know the market already created the lower high on the daily. So what we look for on the 1 hour, we're going to wait for the 1 hour time frame to create the same structure. We're going to wait for the 1 hour time frame to create the same structure as the daily time frame. As you guys can see, what would you guys call the structure right here?
Bearish.
Market structure. What do you guys call this? This, and that.
Also lower high.
Lower high. And then what did you guys notice on a daily time frame? What structure did you guys see on a daily time frame?
Bearish.
Bearish, but what market structure? This is a lower high. What did you guys see on a daily time frame?
Lower high.
Lower high. Right, you know the daily is giving you lower highs, and now you scale down, and then you scale down to 4 hour time frame, of course, to actually see if sellers are coming in, which it did on the 4 hour. And then the most crucial confirmation, aka confluence, that you can get is that small lower high on the 1 hour time frame. That is telling you the 1 hour time frame is telling you the same story as the daily time frame. Now it's time to pull the trigger. Right, you sell it, stop loss above the previous high, and take profit all the way down there. All right, and also if you want, if I can make it easy for you guys, right? Since you know the 1 hour is bullish, you can grab your small trend right here, do something like this. I don't like drawing too much, but you can clearly see, right? Like I mentioned, if the daily is bearish, there's a good chance. There's a good chance. If the daily is bearish, right? If you see this as a potential lower high on the daily, the 1 hour is probably going to be bullish, and you're going to wait for the 1 hour to catch up to the daily time frame. What I mean by catch up to the daily time frame, you're going to wait for the 1 hour to actually break the previous, right? The small, I call it the small uptrend, and you're also going to look for the market to create a lower high, just like it did on a daily. You place your sell, TP all the way down there, stop loss above this previous structure. That is the technical analysis strategy that we use. Yeah.
So let's say since you see the big bearish candle, yeah? Let's say it's
this one?
Yeah. So let's say it's not closed yet, and we sell it, but we also at the same time see prices at support levels, yeah? And we see the candle before that, the green one, is much stronger than the bearish candle. Yeah. So that candle, is much stronger than the previous candle. You see the bearish candle, right?
Yeah.
So how do we confirm it's like price is already at the support levels? How do we confirm it's gonna break the lower lows and gonna go down if the big candle is not closed yet?
Great question. So the first thing you'd look for is a break of the trend right here, right? You can see you have to break up the trend, and guess what? The same thing that you did on the daily, you're going to do it on the 1 hour, right? Remember, like on the daily time frame, for you to get your entry price, you use what tool do you use?
What is it? Sorry.
The fib.
The fib, right? So guess what? You're going to do the same thing on the 1 hour, right? You grab your fib, right? Now you're going to place it from the high, right? All the way down to the low, and guess what?
Oh, all right.
There we go.
Can I use this on the 1 hour as well?
Absolutely, right? You have to use, we use the 1 hour as an entry price, but we also, the same thing we do on the daily, we do it on the 1 hour time frame.
Okay. Thank you.
Make sense? Okay, that's pretty much the technical analysis that we use. Yeah.
So kind of on this 1 hour chart, it looks a little bit tricky because that, like you said, that yellow, that candle, that bullish candle over there, kind of look like an inducement, because if you look at like the tape that you just draw right now,
Yeah.
kind of that candle. Let me just come. Sorry.
Yeah, come on.
Looks like this kind of candle. This kind of candle just kind of mitigate this fair value gap here.
Yeah.
Like this fair value gap. Like this kind of can just mitigate it, and then you see the sell. But like you said, like how do you know to sell? Like it's for me.
No, absolutely great question. But remember, guys, you have to treat each time frame differently. What did I say you look for on the 4 hour time frame?
Look for higher highs and higher lows.
And the momentum.
Momentum.
We already know momentum already shifted on the 4 hour. Right? We don't look for momentum shift on the 1 hour.
You look on 4 hour.
4 hour.
On 1
yeah,
hour.
on the 1 hour you look for a break. You look for the 1 hour to catch up to the daily. So which means if the daily is bullish or no, bearish on the 1 hour, on the daily, right? On the 1 hour, the most important thing to look for on the 1 hour is not momentum shift, because you already had the momentum shift right here, right? Which is from the 4 hour. You get what I'm saying? So on the 1 hour, what you look for the most is a break of the trend, a break of the opposite trend, right? A break of the opposite trend, which means you had this small uptrend going on, you had this break of the opposite trend, and also the market created a lower high also on the 1 hour time frame, right? For momentum shift, you look for it on the 4 hour time frame, because you already know that bearish engulfing, right, was buyers were coming in, buyers were coming in, buyers were coming in, and you had this and that, which is a momentum shift. Obviously, you don't sell it at the low, which is on the 1 hour. You're gonna have to wait for a small lower high to be created between this level for you to sell it. But what I'm trying to say is on the 1 hour, you do not look for momentum shift. You look for a break of the small uptrend, which is the opposite of the daily, if that makes sense.
Yeah, because we trade structure. Yeah, okay, so this low here, this low, right
Yeah.
here, right? With this candle that broke that low, isn't that your confirmation?
Which candle?
Yeah, this candle here.
This candle. Listen,
this bearish candle.
if you see that happens,
this low.
yeah, if you see that happens, it's already too late for you to get in, because you're going to be risking. And again, we have a SOP that we follow. We're not. Our average stop loss is 55 pips, right? So if you do get in here, let's say what you're saying, I get what you're saying, but you have to get a proper entry price. If you do get in after that massive bearish momentum, your stop loss gotta be your stop loss going to be crazy,
Yeah.
right? Because your risk to reward ratio now is not going to make any sense. So and this is why I was saying it is so crucial to have an SOP, because if it's not 1, 2, 3 risk to reward ratio, you're not taking it. Even though we know that the market's probably going to smash, take profit at the 0%, but ain't no way I'm going to risk $100 to make $80. I'm not doing that.
Yeah, like what I'm trying to understand is like the question he asked is, are you still going to enter this trade? Because
No, I'm not entering that trade.
Premium.
Yeah,
I can't enter a premium
I'm not entering that trade, right? Because the risk to reward ratio is not going to make any sense.
Okay, that's what I want
Right?
to understand, because
So-
that can be too large.
Yeah, so the risk to reward ratio has to make sense, guys. You know, like if you miss one setup, there's probably going to be like 10 more setups to take for the entire month.
So you need to
right?
wait for another structure to form for you to take another setup.
Yeah, so your best entry price on the 1 hour, I'm going to put it that way, right? I'm sure you can kind of get what I'm saying. We know that we're looking for sales based on the daily at lower highs, right? So you have to pretty much scale all the way to the 1 hour time frame, and you look for another small lower high for you to sell it at. Does that make sense? Right? So the small lower high on the daily is this level, right? We had the break of the trend. If you use your fib, you at the lower high, right? You've realized the market created a small lower high, probably somewhere around this area. That's probably where you probably would have placed your sell, right? Stop loss above this level. Your take profit going to be at the 0%, which is always going to be at the previous market structure, right? You can get out. Let me zoom out. Right, you get out at the 0% right here. This is where the previous low was created, and the next possible lower high is probably going to be created at the minus 27%. But the 0%, that's where that's where our exit price is going to be at. And if we're trying to hold past 0%, we're probably going to tell you guys to take partial profit, to take 80%. Partial profit, and to probably hold 20% to minus 27, and to also bring your stop loss from minus 50 pips to break even, right?
Can we go back on the 1 hour time frame?
Yeah.
Can I actually come there, please?
Huh?
Can I come there?
Yeah, absolutely.
So, could you put on the fib again, please? Like, oh yeah, it's here. Just zoom it out.
That's daily. So you want me to put the fib on the 1 hour for you?
1 hour, yeah. The way
Sorry.
you put before.
Let me zoom in to make sure I place it correctly for you. Yeah, that's 1 hour, right?
I think it was right there. Like the fib right here.
Let me zoom out. Oh, sorry, this one right here.
Oh, yeah.
Yeah, sorry. It doesn't matter if you place it here, there, it's the same thing.
Right.
Don't want to make it much difference. Yeah, go ahead.
Let's say since we don't see a chart right here, yeah? Since let's say it's just this candle. How do we take the entry though? Like, do we put a sell limit here to touch this 50 levels and then straight away we are into the trade, or do we like manually enter after this closure?
95%, yeah, we manually enter after disclosure, yeah, because I like entering the trade manually, so that's the best confirmation I can get.
The green candle has not touched
Exactly,
50% levels yet.
because this goes for, obviously I would not place an entry here, right, until the market gives me. Also, one thing as well on the 1 hour time frame, I would say the minute you realize the market breaks that small uptrend, that's one of the best confirmation.
You need institutional data for that. If you want to touch that there, you need institutional data.
All that stuff, right? So you can place your fib as well from the high to the low to kind of see where the next potential small lower high is going to be created on the right. Because us, this is a small uptrend. This is a small lower high. We trade with the true lower high, which has already been created on a daily.
And we could also see the bullish volume dropping down very massively and the bearish.
And the bearish, yeah. So what I'm trying to say is on the 1 hour, all you have to do is draw a trend, right? So let's say if the daily is, I'm going to give you guys the opposite example, right? Let's say if the daily is bullish, right? You're going to see the 1 hour trending down. And you're going to draw a trend on the 1 hour. And then as soon as you get that break on the 1 hour, the market should technically retrace to give you the opposite structure, which is going to be the same structure as the daily, which is going to be a higher low in this case scenario, and then for you to buy it, right? The thing is you're going to have to place all your